This Tax Tip Tuesday, and we are joined by Chris Porter from PorterKinney this morning for another great fact about our taxes. Now, we're approaching April, so we're getting kind of close to deadline here, aren't we?
Yes, we
Okay,
are.
so let's talk today about rental properties and when it is concerned with your taxes. So what advice do you offer?
Well, rental properties can be a very tax-friendly investment. And one of the reasons for that is you could actually write off about a 27th of the value of the property each year. It's called a depreciation deduction. So if you have a $270,000 property, you get about a $10,000 write-off every year on that property.
Interesting.
So after that deduction and mortgage interest and property taxes and insurance, you're probably not paying any taxes on your rental property income. You might even be saving money because of your rental property income, saving money on taxes.
Okay, and so there's kind of some myths when it comes to rental properties. You were saying a lot of people, when they go to sell, they're kind of worried about the tax break. So what do you say when you address that?
Well, that's actually a legitimate concern. When you sell a rental property, you can get a huge tax hit. I had a client call me a while ago and said, Chris, if I sell my rental property, what am I going to pay in taxes?
Okay.
And I did some math. He was going to pay $80,000 in taxes if he sold his rental property.
Wow. So why is that?
Well, because the depreciation deduction that you took, that 27th of the value of the property, if you sell your property at a gain, that basically needs to be paid back to the government.
Interesting.
So there's a few things you could do to avoid the huge tax hit. One, don't sell your rental property. Just hang on to it, give it to your kids when you die. Two, you could exchange one property for another in a 1031 non-taxable exchange, which you need professional help on.
I was going to say, so maybe ask your CPA about that.
And three, sometimes you can move back into your rental property and live there for 2 years and eliminate some of the tax gain.
Interesting, which a lot of people do end up doing, especially these days with the market. And I mean, we have a hot market right now, but back a few years ago, maybe maintaining that property was a better option at that point. All right, well, thank you so much for coming in, Chris. We always appreciate your advice.